coming. I think we've got a couple more people that'll be jumping on here in just a few minutes. But as we get started, I would like to introduce Marissa Fitzpatrick. Marissa brings excellent communication skills and a keen eye for detail in drafting estate planning and business documents for the firm RCO Law and its clients. With a practice area that continues to grow, especially through the pandemic, Marissa guides her clients on estate planning, trust, probate, and elder law matters. She listens closely to the needs of her clients and makes recommendations that assure that their future plans are appropriately funded and lifelong savings are protected. In her role as a trusted advisor, Marissa brings great compassion to her work. Results can be rewarding, and that her counsel can bring great peace of mind to families. Marissa was the 2021 recipient of the Community Service Award for Attorneys 40 and Under by the Ohio State Bar Foundation. And one of the ways that Marissa gives back to her community is through her volunteer work with Habitat for Humanity, where she counsels and sets up estate plans for families with new homes. She is also on the Maumee Chamber Board of Directors and the Ohio State Bar Association, the Toledo Bar Association, Society of Service Professionals. She is one busy girl, and we are lucky that she carved out time to share information about the Corporate Transparency Act with us today. So thank you, Marissa, and I'll give it to you.
Thank you, and thanks everyone. Before I get started, if you have questions throughout, Kristen's going to monitor the chat box, so go ahead and just put your questions in that chat box rather than unmuting. It can kind of get convoluted if we have a lot of people unmuting at the same time. So if you put your question in there, if it's relevant to what I'm talking about right then, she'll interrupt me. If not, we'll go through them all sort of at the end of the presentation. I don't suspect this will take very long. I've been averaging about a half hour for these at most. So my goal is to just introduce this concept, make sure you're aware of it, really get an idea if it's relevant to you. And then obviously, if you have specific questions, we can chat after. So that's kind of my goal for today. So without further ado, let's chat about the Corporate Transparency Act. You would be shocked. Most people I come across have not heard of this at all. So my goal is to educate you on it. And it's going to probably pertain to a lot more people than they realize. So I'll probably be getting calls when they start getting in trouble for not complying too, but hopefully that will not be for any of you that are on here today. So what is the Corporate Transparency Act? Well, this is the Financial Crimes Enforcement Network issued this final rule a couple of years ago, and it implemented this Corporate Transparency Act. It is the culmination of years of bipartisan efforts by Congress, the Treasury, national securities agencies, law enforcement, other stakeholders, et cetera, to bolster the United States corporate transparency framework. So a little more on what that means, I guess, is it was implemented to help identify ownership of all shell companies. And really the goal is to eliminate fraud, money laundering, sex trafficking, any other sort of illegal acts that companies were able to get away with because you couldn't readily identify who the owners of that company were. So the intent of this is to make sure those people that are the owners or the important influential people in that company are reporting on behalf of their entity, so we know who is in charge and who benefits from that company. So the Corporate Transparency Act requires these certain reporting companies, which I'm going to define for you here in a second, to file what are called the Beneficial Ownership Information Reports. So BOI is the acronym they're using for this. So what is a reporting company? A reporting company is any entity that was formed by the filing with a Secretary of State or similar law or statute. So examples are your domestic corporations, your LLCs, things of that nature. There are certain trusts that are reporting trusts that are required to report as well. I'm not going to get into that a ton today. I'm just going to keep this pretty high level, but if your business filed something with the Secretary of State to form itself, you initially are a reporting company. Now, there are certain reporting companies, though, that are exempt. What's an exempt entity? Well, the first exempt entity, and I have some other notes that aren't on the slide that I'll hit with you. But the first are entities that are otherwise regulated or have their own reporting requirements elsewhere. So a couple examples of those: banks, credit unions, brokers or dealers in security, investment companies, financial firms, state licensed insurance producers, just to name a few. A couple other ones of note are nonprofits. So there are certain tax exempt entities that are considered exempt. And these are, you're considered a reporting company, but you hit an exemption status. So if you're exempt, you do not have to report anything under the Corporate Transparency Act. You basically ignore it and act like it doesn't exist. The second exemption, which this is sort of surprising to a lot of people, because normally these new laws and acts that go into place are targeting your big companies. The large companies are exempt from this, so they do not have to report. So a large entity, and they have to meet all three of these requirements. They have to employ more than 20 employees on a full-time basis in the United States. They have to file federal income tax returns in the previous year, demonstrating more than 5 million in gross receipts or sales. And they have to have an operating presence at a physical office in the United States. So 20 or more employees have to file 5 million in gross receipts every single year and have a physical office. And that is considered the large entity exemption. So we get the question, all right, we filed 10 million in gross receipts. We have a physical presence. We only employ 10 people. You're not exempt. You have to meet all three of these requirements in order to meet that exemption. So that's a big one to know. These large entities are considered exempt. Now, one that I don't have on here right now is there are certain types of entities. So if you are a subsidiary or an affiliate entity of a large entity, and that large entity is the sole owner of that small affiliate entity, that affiliate or that subsidiary entity does not have to report, even though it's smaller and that entity itself does not have the 20 employees or the 5 million in receipts. Because the large entity is exempt and it's the owner, their affiliate is considered exempt. So that's just a small little nuance that I wanted to point out, because we've gotten that question a couple times. Hey, we have this really large entity that has a very small company associated with it just for our real estate holdings, right? Well, because the large entity is that sole owner of it and the large entity is exempt, that subsidiary is exempt as well. So just something I want to point out. Yes.
What about franchises? Eddie just asked.
Franchises, that's a good question. The big thing to kind of go back to, and I can go through and see if there's any sort of certain exemption. If that person has, let's say you just form a franchise, right? And that franchise, you didn't create any sort of entity with your Secretary of State. Nobody has any way of really knowing you exist. So I have a client that has a franchise, but they created their own LLC entity to hold that franchise. Now, that LLC in of itself, even though it's a franchise business, right? The large entity doesn't own that LLC in and of itself. It's not receiving all of the cash flows off of it. It's the person that owns that LLC in and of itself. So franchises are a little bit different. If that large entity is the sole profiter off of it, yes. If not, and your franchisee is the one profiting off of it and they have their own sort of entity set up, no, they're not exempt. So that's a good question. Franchises are they're all structured a little bit differently from what I've seen, but most times when I see a franchise, that person has sort of their own entity tied to the franchise and they're the ones profiting. So their entity in of itself has to report. But just because the large entity has a bunch of franchisees, that's a little bit different for the large entity. We're more so looking at that smaller business and how it's owned and operated. So my next couple of slides might answer that a little bit better, but that's a good question. So hopefully I answered that. Okay, so who must file these BOI reports? So once you've established an entity as a reporting company, Then they have to figure out who is filing these BOI reports. So the company itself establishes that, yes, we're a reporting company. Now, all of the beneficial owners of that company and the company applicant have to submit their information through this online filing. So let's break this down. So who are the beneficial owners of a company? Now, you might think, okay, that's pretty obvious. If I own the company, I'm a beneficial owner of it, right? It goes a little bit deeper than that. So one, I'm going to kind of jump to number 2 first. So for number 2, anyone that owns or controls at least 25% of the ownership interest in the reporting company is one of the beneficial owners under this law, right? So if there's an LLC and I own 50% of that LLC, I'm an owner, I have to report. If I control 25% of that, right? So sometimes there's difference between like voting versus non-voting interest. That's where that control ownership comes into play. And again, that's pretty nuanced. So if that's something that might apply to somebody, I can walk you through if that would be applicable. But owns or controls at least 25% of the ownership interest in that entity is number 1. Now, back to number 1, I guess on here is the person that exercises substantial control over the entity. So I'm going to go through this with you. This is where it gets a little convoluted, but what does substantial control over an entity look like? So here are some examples that they've written out in the regulations. 1, someone that serves as a senior officer of that entity. They are someone that exercises substantial control. 2, anyone that has authority over the appointment or removal of any senior officer or a dominant majority of the board of directors. They give you a whole list, but if you have appointment and removal authority over the senior officers or over a board of director, you exercise substantial control over that entity. 3, this is sort of their catch-all, someone that provides direction, determination, or decision of, or substantial influence over important matters. I don't know what that means. I don't think anybody really knows what that means. So a lot of times what we're telling people in this instant is if you are unclear, if you exercise substantial control over that entity, and it's arguable that you do, you should report. There is no penalty for reporting, even if you might not meet the threshold standard, right? But not failing to report, there are some penalties for that, which I'll get to here in a little bit. So the big thing, I guess, to know too, titles are not necessarily determinative nor really relevant when it comes to this. For example, let's say you're the vice president of a company. That typically implies that you have some authority to decide important matters, but it doesn't necessarily mean that you do. So titles don't really matter. It's, do you serve in a position that you exercise substantial control over that entity? If you have a right to make an important decision on any important matter of that company, you exercise substantial control. Their goal is to scoop up as many people as possible within this very murky definition of substantial control. So, like I said, that catch-all is there on purpose. Now, if you're just an employee that shows up, collects a paycheck, and moves on, probably not. But if you're any sort of management decision, you choose whether to hire or fire somebody, you choose whether to expand or shut down an office, for examples, those are substantial control under this example. So, all right. And then one thing I just want to point out, this substantial control, it can include a trust, same thing with the ownership interests. So if you have a trust that owns interest in a business entity that does not meet any of the exemptions, that trust may have to report itself as well. And it may include reporting the trustee. It can include reporting the beneficiaries. There's some pretty specific details when it comes to a trust. So just something I like to point out, especially for like CPAs or financial advisors. You might have people that have a trust that have some real estate holdings within it. It's possible that your trust is going to have to report as part of that entity having these reporting requirements. So just be aware that it's out there. This does not mean every single trust that is in existence needs to report. I got that question earlier today. That's not the case, at least as we know it today, right? These laws are always subject to change. So I'm presenting to you what I know today. That could change tomorrow. That could change in 10 minutes, but hopefully this is relevant information for quite some time. All right. Now, I kind of went through. So there's the two structures that comes to the people that have to file these BOI reports. One that we just went through are those that exercise substantial control or have ownership interest in the entity, right? Those are beneficial owners of the company. Those are people that have to report. The second part of that are the company applicants also have to report their information. So a company applicant is the person that was directly responsible for creating that entity through the Secretary of State's website. So as an example, a couple of weeks ago, I had a client call and say, we want to form an LLC. We have some commercial property. We're going to rent some of it out. Said, okay, no problem. Filed it. We created it, sent the client their information, and then followed up and said, we are your company applicant. You need to report our information now as well. Okay. So because I was the person that formed that entity for the client, I had to report my information as their company applicant. Now, another example is, let's say that you have a paralegal or an assistant or somebody that you've delegated this authority to. You said, you go file this for me, but you oversee that person that's responsible for doing it. You and the person that filed it also have to report. So just because you're not physically doing the application, if you're overseeing somebody that you've instructed to do that, you both have to report. So sometimes it's just easier to do it yourself and report your own information, but just keep that in mind. I don't know if there are any other lawyers that are on this, but it might come up. So we've instructed our paralegals to make sure they're aware of what information needs to be reported for the company applicant side. Now, I will touch on this in a little bit, but the company applicant filing information only has to be filed for new entities. So let's say that you have an entity that's been in existence since 2015. You do not have to report your company applicant information. This is only for entities created after January 1, 2024. They are the ones that have to report their company applicant information as well. For entities that exist prior to January 1, 24, they only have to file their beneficial ownership information reports for those that have the substantial control or the ownership interest. So the company applicant is left out. They felt this was necessary because there could be companies that have existed for a long time and the person that formed that entity may not even be around anymore. So that was sort of one burden. They took off the existing entities for that. All right. So next is when you get to actually filing these reports, what do they look like and what do they include? I will tell you, it's an online system. It's not too scary. It's actually very self-explanatory. I've been through it a couple different times, but it's everything that you would think you'd need to provide in order to let them know who you are. So once the reporting company has identified itself and who those beneficial owners are of the company, those particular people will need to report their name, birth date, residential address, and some unique identifying number. So like your driver's number, for example. And then on top of that, you need to make a copy of that driver's license and submit it to them as well, so they know it's a real document. So you could use a passport number. There's a couple different options for your unique identifying number, but most people are going to readily have available their driver's license for that purpose. Now, once you've initially submitted that information, you can get what's called a FinCEN identifier. So I have a FinCEN identifier, and what I did was I just went on, I submitted all my information, and it popped out this like 16-digit number. I forget how many it is, but it's a unique number specific to me. So next time, if I have to go file a report or update a report at all, I just have to input my number. I don't have to fill out my name, birthday, address, all that again. You do not have to get a FinCEN identifier number, but we are urging people to, and I'll tell you why here in a minute. But this will just sort of make it easier, right? Once you get your number, that's all you have to submit. What I'm going to touch on is you actually have to keep this information updated. So for example, if you're a beneficial owner, you input your info and then you move 2 years later, you have to go update your address. So this isn't like a one and done sort of situation. This is you have to keep this information current. So why we're encouraging these FinCEN identifiers is, let's take an entity that is large, right? Let's say they have 30 employees, but they're not grossing 5 million in receipts every year. And of those 30 employees, they have 20 of them that exercise substantial control over the entity. They have 20 people they now have to have information reported on. So we're encouraging these companies, and we'll say, once you've identified you are a reporting company, have those people that need to report go in and input their information and pop out a FinCEN number, right? Make them responsible for doing this. Then all you have are 20 FinCEN numbers that you have to submit over rather than get everybody's information. The benefit to doing that then is if one of those people move, they can just go update their individual information. They don't have to go update the whole company's information again. So we think this will probably be helpful long-term, especially for people that are submitting as a company applicant a lot. You don't have to go report the same information all the time. You're just going to update your own individual profile that's associated with your FinCEN number if your information changes. So I hope that was not confusing the way that I just presented it, but you have the option. It's not a requirement. Okay, now one thing I want to note, and this is part of sort of some pending proposed regulations. FinCEN is letting people know that these BOI reports will not be public record, meaning you won't be able to just go on and search somebody else's BOI information, right? But these BOI reports are expected to be used for certain types of requests or investigations. So right now, in addition to the expected federal and foreign national law enforcement agencies, state and local agencies can access the BOI reports for purposes of criminal and civil investigation. Financial institutions can access these reports to aid their customers in any sort of due diligence compliance obligations. And the Department of Treasury and IRS may be able to access these for tax compliance purposes as well. So these are proposed regulations that are out there as far as who's going to be able to access it. But as far as it being just an online searchable database for the general public, that's not going to be the case as we know today. I don't really foresee it being that way, but I just want to point that out. Okay. So what are the dates of these, right? And I think I touched on this a little bit already. So for any new companies, any entities that were created or registered January 1 of 2024, once that company has been registered starting January 1, the company has 90 days after its notice of creation in order to file their BOI report. So if you know anybody that filed an entity since January 1, they probably don't have a ton of time left to get compliant with this. Probably, you know, a month at best. So 90 days after registration, that is when you're supposed to file this report. Now, as I sort of alluded to, if there's any changes that occur to the beneficial owner information, those changes are supposed to be reported within 30 days from the date of change. So my example, if you filed your information and you move, you have 30 days from moving to go update your new address. So keep that in mind. That's sort of important. It's sort of a burden, but I don't make the laws. I just abide by. So that's sort of one thing I want to point out. 90 days after it's been created, 30 days from the date of a change. Now for existing entities that were created prior to January 1, 2024. So even an entity that was created December 31st, 2023, and any time prior, all of those entities have until January 1 of 2025 to file their report. So they have all year to get this information and get it reported. we are sort of encouraging people, you certainly for existing entities don't have to rush to go do this, right? But don't wait until October or November and start scrambling for this information. Probably by midsummer, we would like to see people start getting compliant by this. Hopefully it's been out long enough by then that entities and those key players are aware of this. But like I said, I don't think you have to run out and do it tomorrow. But if that's a good way to keep you advised of it and make sure you don't forget, then by all means, absolutely. And like I said, existing entities, December 31, 23 and prior do not have to report their company applicant information. All right. This is my favorite part, are the violations. And I think it's my favorite part because people don't realize how big of a deal this is, and they will eventually. So how do violations work? Well, one, if you provide false or fraudulent information on that BOI report, including a false identifying document or anything like that, you will be in violation. Two, failing to report complete or updated information can also result in a violation. The violations for not complying with this are pretty severe. One, you can be liable to the United States for civil penalties of not more than $500 for each day that the violation continues and has not been remedied. And two, you can be fined not more than $10,000, imprisoned for not more than 2 years, or both. So I've underscored it and bolded it. This is an and. So all three of these could actually apply from a violation standpoint. Obviously, we have not seen how these violations are going to work yet because this hasn't been in existence for 90 days quite yet. But I'll be curious to see how this pans out, especially after January 1, 2025 for all those existing entities. So we're really just stressing the importance of this because these violations are no joke. These are pretty severe. This can get really expensive if somebody's not aware of this and they are found to be in violation. So again, we've had clients that say, I'm not doing that. It's none of the government's business. And all we can say is we highly advise that you pay attention to this. This is not an option. This is a requirement going forward. So we don't really have a choice. We have to comply with this. But these violations are so severe that I want to point it out because this isn't a $10 a day fine. This is a $500 a day fine, and that can add up pretty quickly. Yes, Kristen.
Darlene just asked, are there penalties for failing to report an address change, or if circumstances have, changed for you, for, sort of minor things? Are there penalties for those things?
As far as we know right now, they are roping every single type of violation into these fines here. So failing to update your information is part of these fines. Now, again, I don't know how that's going to play out when this actually gets to a point where they can issue violations. I'm certain we will be given some more guidance on that, but yes, they are kind of roping this all into one. Was there another question?
No, Eddie just said, will we have access to these slides afterwards? And the answer is yes, we will be sending the slides out, and we'll also have this recording available in our newsletter. So.
Yep. And we have a nice article too on our website with links to a lot of different things. There's and I'll get this next slide is kind of where you go do all of this, right? So this is FinCEN's website. This is a screenshot of this home page to this link right here. And it's really simple. You click where it says file a report using the BOIE filing system. Not hard to get through, but if you want some more additional guidance on it, if you see in the left-hand corner, it says small business resources. Mm-hmm. They have a guide. It's incredibly long. I want to say it's around 50, 60 pages. And it's called the Small Entity Compliance Guide. It's very helpful. It has some graphs of sort of start here. Does this apply to your entity? If your answer is yes, go here. If your answer is no, go here. So that's also very helpful if you want some more detailed on this. I've, of course, read it backwards and forwards probably 20 different times, so I can sort of help, but questions, a little nuanced questions like with franchises or what have you, I'm happy to help where I can with this. My goal is really to just get people aware of it, tell your friends, tell your family, call me if you have questions. But yes, this is the system. And like I said, it really took me a couple minutes to get through it entirely. So once you have your license picture ready to go, it's very simple and self-explanatory. So don't be frightened by this, just be aware of it.
Okay. One more question here. How are
Mhm.
businesses being alerted to this filing? Like postcards, emails, or we're just all expected to know?
Yes, that's a great question. If businesses have an attorney, hopefully their attorney is making them aware of us. We have mass mailings that are going to go out to all of our existing clients, hopefully this summer. I'm disappointed so far, but I'm hoping that changes where the Ohio Secretary of State will prompt something, but it doesn't appear so.
Okay.
So your guess is as good as mine. As far as I know, there's no postcards going out. There's no information going out. This is just sort of, you better figure it out. So attorneys are getting fielded with a lot of questions on this. I know CPAs are as well. The best thing I can tell people is just educate yourself, make sure you're aware of this, and tell people about it. That's all you really can do at this point until they decide to make some sort of big mass public announcement about it.
Great.
Not helpful, I know, but
No.
that's all I know.
Well, the slide deck that you put together, I will specifically send it out to everybody that signed up for this. And then next week, when a newsletter goes out, we'll have this available for all chamber members. So I would think if you know somebody that you think this would apply to, let them know that this information is available. And Marissa's information will be there too.
Yep.
Does anyone have any other questions?
I'll keep this up for a second. If anybody has questions, you can reach out to me directly. I'm happy to help if you have separate questions or know somebody that you think should reach out. I'm happy to talk to them and at least kind of go through the checklist of, does this apply to you or not? So,
Right. Perfect. Thank you.
great. Thank you all for attending.
No,
Thank you so much. It was very informative. Thank you.
Good.
Yeah, it was great. I definitely learned a lot, and I hope people, are aware of this because it does sound like it's a big deal. So,
Yep.
yep. All right.
Great.
Thanks.
Well,
Thanks
have
for
a good
coming,
afternoon,
everybody.
everyone.
You too.
Thank you. Bye.
Thank
Bye.
you.